Hello and welcome to AWS Presents the Unicorn Makers in association with CNBC-TV18.com with me, Shruti Mishra. Now, through this unique initiative, we turn the spotlight on notable unicorn product chiefs from different sectors in India, their inspirational journeys, and how they are leveraging tech innovations to reach greater heights. Today, we will focus on the fintech sector, its growth potential, and how unicorns are using emerging technologies like cloud, artificial intelligence, and machine learning to disrupt the payment landscape in the country. As per an EY report, the fintech sector in India is expected to reach $200 billion in revenue and $1 trillion in throughput by 2030. Moreover, our market for digital payments is likely to be more than triple by 2026, reaching a staggering $10 trillion. By FY27, digital payments are also expected to account for 46% of consumption GDP. So it is important to understand the role of fintech unicorns in driving this exponential growth, as well as the technological advancements and innovations enabling them to push the boundaries of payments. To dive deep into the space, I have with me Satinder Singh, Head Solution Architects India, DNB AWS, Kilan Haria, Senior Vice President and Head of Payments Product at Razorpay, Madhusudan, CEO and co-founder of Credit B, Prashant Ranganathan, CEO, PayU Credit LazyPay, Rajiv Agarwal, founder and CEO, Innovity Technologies Private Limited. Gentlemen, welcome to this special show. And, first, let me start with you, Kilan. Your recent launch, Razorpay X Digital Lending 2.0, is aimed at enabling NBFCs and fintech enterprises to comply with RBI's latest digital lending guidelines. If you could tell us a bit more about it and how you're leveraging technology to introduce automation in dispersal and repayment, basically simplifying money movement and solving complex challenges in the fintech ecosystem.
Sure, Shruti. I think when RBI's deadline started approaching, it became mandatory for businesses to move to newer and more compliant processes where money has to flow directly between the NBFC and the borrower. In the erstwhile processes up until now, generally
Kilan, I believe we can't hear you. We can't hear you, Kilan. Why don't you just re-log in? And yes, I'll move to Madhusudan. Madhu, you recently raised $80 million in funding from investors like Motilal Oswal Alternates, Azim Premji Invest, and Mirai Asset Ventures. How do you plan to use the funds to strengthen your tech stack?
Hey, thanks, Shruti. And yes, I mean, it's just that last week we kind of concluded with our Series D funding. This one was very special for Credit B because there's some kind of an funding winter that has kind of started or kick-started. I mean, that's what we hear. And going forward, it might continue for a while. And in such ecosystem, I think in such kind of an environment and scenario, we raising this particular Series D was a kind of a confidence from the investor community, the market, that the business what we have built is quite sustainable and it's kind of scaling at a very decent pace and whatnot. So in that ways, we kind of really welcome this particular the funding that what we raised. And coming to the proceeds, what we are going to really use it. There are multiple focus of this. One is we are a digital lending company with a systemically important NBFC within the group, which means that there is certain equity to debt leverage that we have to kind of maintain for the healthy growth of the business. And that was one of the key requirements, not to shy away from that we were almost hitting our AUMs towards certain leverage thresholds what we had set for ourselves. So therefore, equity infusion was very much necessary. Not just that, I think we are also trying to foray into multiple more products. For us at Credit B, the entire product strategy is centered around the customer needs. Today, we serve more than 6 million customers with our personal lending product to salaried and self-employed groups. But what we have seen is a specific interest from this self-employed group towards their working capital needs. Our focus has been towards the mid-India segment. What I mean by that is more than 70% of our customers are from non-metro cities. And these are the self-employed guys who are looking for these working capital loans. These are micro SMEs which are looking for working capital loans. So we are looking at launching a SME working capital loan product as one of the new products. And we are open to kind of course, when we have to launch such products, we have to kind of look for new teams that can kind of come in and gear this product up. We are open in terms of either acquiring or even acquiring some of these companies to launch these products. All in all, and there's other segment of people who are looking for two-wheeler loans from our customer base. So more or less what I would say is that it's all customer centered, and we would be striving for those products, and that's where the utilization of the funds would go through.
All right. Okay. Let me now go back to Khilan. Khilan, you've joined us back. I was asking you about your recent launch, Razorpay Digital Lending 2.0, which is aimed at enabling NBFCs and FinTech enterprises to comply with RBI's latest digital lending guidelines. If you could tell us more about it and how you're leveraging technology to introduce automation in dispersal, repayment, simplify money movement, and solve complex challenges in the FinTech ecosystem. Khilan, can you hear me?
Hi, I can hear you. I just got back.
All right.
Yeah. I think when the new guidelines came in, it was very important that a platform like Razorpay can enable fintechs and NBFCs to comply with the new guidelines and money to flow directly from the NBFC to the borrower. In the erstwhile process, it could flow via the fintech's nodal account, fintech's escrow account. And one of the most important aspects that we look at Razorpay is when such disruptive guidelines come in for fintechs and NBFCs both, it's not easy for them to comply. So one is about automating and helping them comply. Second is about how do you make it really zero effort for them. So the entire process, onboarding, how they come on the platform, what changes they will make, how do we minimize that to close to zero to ensure the integrations continue working as is, and these folks are able to comply with the new guidelines. So all in all, I think this platform, we believe, will help both NBFCs as well as fintechs to partner in a better fashion and to streamline the money movement and better experience for borrowers.
All right. Okay. Let me quickly go to Prashant now. Prashant, tell us about the role technology has been playing in building India's credit super app. How can customers use LazyPay Credit to shop from both online and offline merchants?
Thanks for having me, Shruti. And yes, look, it's a truly unique time for both India and for fintechs all around. We offer credit as our primary kind of value driver in the application, which is LazyPay. And that, unlike rewards or any other kind of payment related aspects, has a deep draw, because credit is truly a aspirin in the Indian market or the Indian context, with more than another 200 million consumers looking to access better forms of credit. So I think that's a primary draw for us. And when you look at the next 200 million consumers, not the top 20, 30 million that I think are pretty much overserved by banks and some of the large NBFCs, when you look at the next 200 million, I think technology has to play a very deep role. Because first, it's around scale, right? So if you're looking at 200 million consumers, these are not consumers centered in the major metro cities of the country. They are actually far dispersed in the corners of the country. So technology, and primarily mobile technology, is the only real way to get access to them, or for them to have access to your service.
Sure.
Secondly, it comes down to throughput and performance. When you're talking about 200 million consumers, and today we do about 4 million consumers that we serve every month, you truly need to be deeply tech enabled, not tech bolt on, right? Again, I think without that deep tech DNA in the product, like a LazyPay, you wouldn't be able to process 4 million consumers every month for credit. To give you a sense of scale and throughput, we get 200 million requests per month for credit per month through our various large merchant network, as well as our fintech network. So a process that in real time is a huge challenge, and to deliver the right throughput wouldn't be happening without tech. And last is availability, right? The way we compete with the cost of capital that the banks enjoy is through 24/7 availability. A consumer looking for a piece of credit in the middle of the night on a weekend can still avail it through any one of our apps, whether that be Credit B or Lazy Pay or many others, but they can't perhaps if they were to go to a branch. And so that availability also is truly enabled through tech. So that's, I think, the three dimensions I would comment on, and all three very deeply entrenched in tech.
Absolutely, absolutely. And let me go across to Rajiv now. Rajiv, your recent rebranding initiative saw Innovative Payment Solutions become Innovative Technologies. What inspired you to do this, and how do you think payment technology is evolving to accelerate commerce instead of just enabling it?
Yeah, thanks, Shruti. Thanks for having us on the show. Yeah, this was an interesting journey, and I guess triggered from the stakeholder which matters the most, which is the customer.
Yeah.
So over the past few years, we've been seeing a couple of changes. One being that payments was slowly moving from just being at the point of checkout to being a part of the discovery of the consumer. So if the consumer had knowledge about what are the different kinds of payment options or purchase options that I have at the time the products they were discovering, then it was very clearly established that the likelihood of converting was very different. So that meant that the payment process had to move much earlier. It had to move from checkout to discovery. This was one phenomena that was happening with customers. The second aspect was the fact that the customer themselves, and I'm talking about enterprise customers first, and then I'll come to mid-market. Enterprise customers had evolved a lot in their own use of technology, meaning we power some of the largest enterprises in the country, the top 10 enterprises, whether it's in grocery, whether it's in fashion, whether it's in hospitals, whether it's in electronics, processing more than $10 billion of GTVs. What happens there is that these enterprises, we saw that they were no longer satisfied with just canned solutions that you could give to them. They had unique problems, and they wanted to solve their unique problems in their own unique ways. So you needed to somewhat unlock their creativity by giving them not just canned solutions, but actually sort of tools, if you like, which they could use, almost like Lego blocks, if you like, which they could use to create their own stories, create their own solutions. And that was very, very, it was actually a very moving finding, if you like, because you realize that people had, during this period of COVID, they had suddenly, they've been immersed with technology. Every night the CEO was going to sleep with the perspective that, am I missing something? Is there something more that I can do? And we figured out that if we could give them tools which could help them unlock their creativity so that they could find their unique solutions to their unique problems, then they could take payments embedded much deeper into the customer journey and make it an accelerator of commerce from just being an enabler of commerce. So that was the inspiration behind this shift.
All right. Okay. And thank you for taking us step by step on this journey. Satinder, coming to you now quickly. Digital payment volumes are growing around the world, which means fintechs need to strategize and scale fast to meet the increase in customer demand. How can migrating to the cloud help in such a scenario and enable companies to become more agile and nimble, which is the need of the hour?
Sure, Radhika, and thanks for inviting me. Broadly, cloud helps in 4 areas. The first one is agility. And deployment within a cloud means that payment companies or fintech no longer have to manage underlying infrastructure. They can really focus their time and resources on businesses, deploying solutions faster and delivering new value. The second one is scalability. Now, on cloud, fintech, payment companies, and customers can scale up services up and down as needed, making it really easy to respond to market changes, ensuring business continuity, controlling cost, because that's fairly important, through the use of secure, scalable, and on-demand infrastructure. I'll give an example. And I'll give example of Razorpay. Kilan has a better perspective than me. He's better equipped. But when Razorpay migrated to AWS, we were able to reduce their latency from 400 milliseconds to approximately 10 milliseconds.
Yeah.
And as part of the migration, we were able to support 150% increase in traffic without any impact to performance or availability. And that's very foundational for a payment company.
Absolutely.
The next one is innovation. And the platform, a cloud platform provides variety of services. In fact, on AWS, we have 200 plus services wherein customers can use to transform their environment. An example of that is Vanguard. Vanguard, when they migrated to cloud, they had almost 850 production applications. And after migrating to cloud on AWS, they were able to increase the volumes by 275% using some of the microservices-based architecture, and they increased the speed of market from 3 months to 24 hours, and while reducing the unit cost by 50%. So I think if you look at these 3 or 4 aspects, these are the unique value that a cloud can bring to fintech companies.
All right. Like you said, Satinder, that Kilan is better equipped to answer. Kilan, coming back to you, I want to know how powerful is your payment gateway in a super dynamic world where customers don't settle for anything less than an exceptional purchase journey. How do you leverage innovative technology to help business integrate your gateway, offer multiple payment choices to customers, basically ensuring a smooth checkout and settle customer payments quickly? How are you doing that at Razorpay?
Yeah, I mean, first of all, to add, I think Razorpay is no longer only a payment gateway, and we are a full stack payment and banking platform for businesses. And solving for new and new problems and building new technology in an agile fashion in the fastest time, I think, has been one of our strengths and has helped us in a scale-up journey. The way we architected the product on day one, the core payments platform, and exposed it as a payment gateway product, helped us crack the core payment gateway market, but also allowed us to explore a bunch of other opportunities because there are businesses that don't really have a website. How do we help them collect payment? We started a payment pages product which helps them create a microsite. If you're collecting money on WhatsApp as a mompreneur, you could just send a payment link. We started looking at B2B payments apart from B2C. We started looking at recurring. So today, I think our suite is comprehensive across B2B, B2C, one-time, recurring, plethora of payment options across all modes and methods. And I think the core premise that has helped us is, I think, foundationally 3-4 things. I think at the base of it is our technology first nature in what we do. Some of it, we just heard from a co-panelist. I think it's very important today for a platform and infrastructure offering to have the highest availability, highest possible scale, so that when there are peak loads around Diwali, around Big Billion Day, around these sales that are happening, around IPL, around the IRCTC Tatkal window, I think we are able to support and ensure our latencies are the same. They don't really go up, and a conversion success rate are all-time best in class. So I think the way we build this infra, and today we support the highest scale for India in any payment platform. Second is, I think we are very customer obsessed in how we solve for problems. One of the few payment gateways we think about end consumer despite business being a primary customer. So we build a checkout solution thinking that businesses don't have to extend and innovate on the checkout layer, which kind of helps them reduce the drop-offs. We started thinking of how we could streamline the discovery funnel ahead for businesses so they don't have to build stuff which is easily available for large behemoths and enterprises. We started solving for frictionless payments. Today, entering a second factor authentication is not very straightforward. Auto reading the OTP, can that page go from something that's not mobile friendly to mobile first? Many of these. And I think the third is innovation at the core of it, right? And that's the DNA in the organization that we've built, that we've got to be first to market in pretty much everything that's happening in the fintech world. Be it as latest as the credit card option on UPI that got enabled a few days back on some of the PSPs. You're the first one to power for merchant. And many such suites, including tokenization, including several of these. So I think the DNA of thinking for businesses and embracing the pain point and building the DNA of the organization or innovation, I think these are things that have really helped us stay ahead and create the value for businesses.
Absolutely. Innovation is important for businesses as well as for customer satisfaction. Coming to now, Madhusudan, recently you announced your partnership with Cash-Free Payments, a banking solutions company. Can you tell me how this will help your customers to convert their online purchases into EMIs while checking out? And how will this association help Credit B to sort of disrupt the digital payment landscape for India's underserved?
Hey, so first of all, Credit B is a platform. It's a fintech platform which works with, let's say, hundreds of partners, right? So these are debt partners, there are marketing partners, channel partners, or DSA networks, or payment partners, and many more, right? So one of the core things is like leveraging partnerships has been the core of our culture, right? So I think that should be the one what is very much required within the fintech ecosystem as well, right? So first, we build a trust and strive towards mutual benefits with any partner that we work with. Now, specifically coming up with this cash free, right? So, like cash free, we work with here, we work with Razorpay, we work with PayU, so cash free is also one of the payment gateways with which we work with. But recently, we integrated with them for our checkout solution. Now, here, what we rely on is the merchant network that the Cashfree has integrated with. Likewise, it could be the same merchant network what Razorpay would have kind of integrated with. Right. So it, as I told earlier, that we focus core on this mid-India segment. Right. So
Yes.
and therefore there is a need for penetration, and that is brought very strongly by the payment gateways today, where they are not just integrated with this metro merchants, but also kind of deep penetrated in tier 1, tier 2 cities and whatnot, right? So that becomes a good platform for us with the strength that what they bring in. And now, what we bring onto the table is the entire EMI solutions, or the digital underwriting, the seamless customer experience, what we bring on the table to serve these customers. So therefore, this is a win-win strategy. I think all in all, partnerships has been core of our growth strategy. And also it has helped us to kind of serve our customers way better.
Absolutely. So let me go to Prashant now and find out his win-win strategy. Prashant, how versatile is your merchant checkout solution? Can you tell me how you've leveraged advanced technology to eliminate the need for PINs and OTPs so customers can easily shop via apps, QR codes, UPI IDs, or partner websites without basically worrying about security, documentation, or hidden charges?
Yeah, so look, I think it's always strange to make this statement amongst the fellow panelists of payment providers, but I think the best payment experience is when there's no payment experience, right? No customer wakes up and says, oh, I want to buy this product today or avail this service today, but I want to have a phenomenal payment experience. They actually don't want a payment experience if they can avoid it. So my mission is to fundamentally eliminate all payment experiences. So, and I think credit can do that by decoupling purchase from payment. So we wake up every day saying, hey, how can Lazy Pay use all the data, all the tech, and all the information and all the trust that we have kind of created between the user and ourselves to fundamentally eliminate any payment experience. And if we do that, then we've accomplished a true win-win kind of experience for both the company and the customer. So like I mentioned, so today we get 200 million pings for eligibility from our 58,000 merchants across the very large landscape of India. And that's some of them that's through PayU, some of that is through Razorpay, and some of that is through bespoke integrations that we have with merchants like Zomato, Swiggy, BookMyShow, Dunzo, etc. Right? And when that happens, out of that, we have been able to successfully pre-approve some 66 million consumers. So still a fairly large fraction, but a fraction nonetheless of the 200 million. Out of those 66 million, we on a monthly basis serve 4 million. And that's the ratio and how we stack up, right? I want that 66 million to go to north of 100. And I think that's very possible with all the things we're doing in our data science and our clustering and our underwriting. So that even before the customer shows up at one of our merchants, they're already pre-approved. So the merchant calls us for eligibility. We can say, yes, this customer is good to go. And that customer just has a seamless, no OTP, no PIN, simple one check, and then very seamless experience on the back of it. I want that 66 million to go to 100, but I also want the 4 million to go north of 50 million, right? So I want 50 million monthly active users on the back of credit. And I don't want to reward them, right? I don't want to give back cash to create unsustainable businesses. Today, India is a minefield of unsustainable businesses that are overhyped. I think that's many of them won't survive. But I think we can create a true value proposition that the customer benefits from. And that can be achieved through this winning customer experience, which you talked about. And our answer to the case is credit. So we will continue to strive to make our credit offering much better to more consumers, so that they don't have to have a payment experience.
Okay, all right. So no payment experience is good. But let me go to Rajiv now quickly. Rajiv, tell us how your collaborative commerce platform helps merchants to derive more profit from sales and drive more conversions. What is special about the purchase tools you offer, and how do they level the playing field between large and small businesses?
Sure. Thanks, Shruti. So let me give a little bit of context here. So if you see over the past about 7 to 8 years, since digital marketing capabilities have been adopted by businesses, be it from Google or be it from Meta, what has happened is that the digital marketing has reduced the barriers for a competition to reach your customer. So there has been a sort of a democratization of consumer access that these tools have caused. So if I'm able to reach, meaning I as a business, if I'm able to reach my target consumer, so can my competition. And the result of that is that actually it has been proven that while the cost of accessing the consumer has gone down, the cost of converting the consumer has gone up. It's actually gone up by 80%. And that's evident in the fact that a lot of businesses, as one of my co-panelists was saying, unsustainable businesses are just trying to convert consumer by giving them deeper discounts, larger discounts, all kinds of things. And it's known, there's a report which captures that it's almost gone up 80%. So what do businesses do in this environment? No, you can't go back to the consumer and say, hey, look, don't see the ads coming on your mobile, don't see the ads coming on your laptop, go back to the old days of print and all that. The consumer has shifted, fundamentally shifted. And the barrier that the brands had around them of saying that, look, this consumer is mine, has gone down. The consumer is visible to your competition. So there is, I believe, a new kind of commerce that has been sort of baking up, but now it's becoming more mainstream, which is collaborative commerce, where brands are saying, hey, look, we non-compete brands. I could be a bank. Here is a merchant. There is maybe an OEM like a Nike. They are all talking to the same consumer, but there's no platform which enables them to talk to each other. Correct. That's where we come in. That's where we come in, because now we tell these brands that, hey, look, you are talking to the same consumer. If there was a way by which you could talk to the consumer together, because you are non-compete, maybe you have an opportunity of not only improving the consumer's consideration for your product, but because you are talking together, you could share in the cost of conversion and reduce the cost of conversion dramatically. So fundamentally, that's what we are doing. We are helping brands come together. So it could be an HDFC and a Nike come together, or it could be a Google Pay and a Puma come together, or what have you. So you take the product brands, you take the merchants, and you take the banks, and you bring them together. And when you bring them together, you allow them to look at opportunities in targeted manner. You look at them being able to access those opportunities by creating interesting purchase tools, etc. Now, coming to your point of how does this level the playing field? So what we have done is that this kind of collaborations between businesses in the past was available only to large businesses. You had to be super large enterprises, and you could have a co-brand card and whatnot. These were all collaborations, but they was available to large. What we have done is to lightweight this using very sophisticated technology and take it to the cloud. So once you take it to the cloud, whether you're a small business or a large business, right, you have an equal access to the tools, you have an equal access to partnerships, you have an equal access to the consumer. So that's what we have done. We have leveled the playing field, saying that, hey, look, now it could be a Sri Akshay Traders in Koramangala who has access to the marketing budget from HDFC Bank in order to be able to go ahead and attract its customer and convert them at a lower cost than possible otherwise, because he's sharing budgets. He's sharing the marketing budget. So it becomes more profitable. Secondly, because he is able to advertise by saying, look, HDFC consumers, here is a special offer, you automatically attract more consumers to come in.
Sure.
So the consideration also improves. So it is really applying cloud to collaboration, which has leveled the playing field for big and small business. And we believe this is the way the businesses will shift. They will figure out that the consumer is not yours alone.
All right. Let me come to Satinder now. And Satinder, I want you to throw some more light on what Rajiv was just saying. He spoke about collaborative commerce. He spoke about, how cloud will, enable a level playing field. So I want to ask you, among the many tech innovations disrupting India's payment landscape, how is cloud helping fintechs create products that are easy for use among the masses and most importantly, compliant with regulatory frameworks? He spoke about a level playing field that cloud enables. Your thoughts on these?
Yeah, I think I completely agree with Rajiv first. I think cloud enables democratization of technology. And with 200 services, whether it's a big customer or small customer, all have access to the technology in an easy to consume fashion. Now, coming to some of the tech innovations, there are many actually, but I'll pick two. Let's first start with the data itself. And why I'm starting with the data, we all know companies operating in fintech and financial services industry deal with very high volumes of data every day. In fact, one of the estimates says that these companies add approximately 2.2 million terabytes every day. Whether from transaction history to market information, fintechs need to break down these data silos and turn these raw data into insights in the drive to bring innovation to digital finance and address customer needs in real time. If you consider that, they need to harness the data to uncover insights into customer segmentation, engagement, pricing, market positions, risk, valuation, performance, security and surveillance, compliance, everywhere. How do they do that? They actually need tools and capabilities to decipher and understand what this data means. That's where cloud comes in. I'll give an example of Paytm. I think all of us understand what Paytm does. When Paytm foresaw data volumes to be expanding very quickly, they built a highly performing core data platform on AWS. And this platform, all the Paytm's business units, merchant, rely on the insights from this big data platform, everything related to user adoption, sales, revenue generated, and make informed business decision. They were able to spin up this technology and execute most of their core ETL processing in as less as 10 minutes, down from 12 hours that they were taking, while reducing the cost by 30%. So that's the big part where cloud plays a role in providing tools and technologies related to data. The second one that Radhika, I'll possibly talk about is machine learning. And we all understand the kind of impact that machine learning can have, specifically on this sector. To my mind, there are three big use cases of machine learning. The first one is personalized finance and customer experience. As I was talking about, one of the key differentiators of fintechs when compared with incumbent player is their ability to harness data. And they can harness this data to offer hyper-personalized product and services, as well as either frictionless experience or no experience. Insurance, this is particularly important. So insurtechs are collecting data on people's let's say, driving habits to build on conventional data sets. So that allows them to offer products and better assess the customer risk profile and recommend specific products. The second is workflow automation. And we see a lot of fintechs in lending and insurance space who have migrated their underwriting workflows to a digital format. And they continue to handle substantial amount of scanned documents uploaded by customers from invoices, due diligence reports, tax papers, bank statements, so on and so forth. So extracting relevant data points and identifying relationships in these unstructured data is a manual and time-consuming process which machine learning can solve through easy-to-consume APIs. The third one will be financial data analytics. And specifically in capital markets, many fintechs serve as ISVs providing software solution to, let's say, financial services institutions like hedge funds, asset managers. And to better anticipate market movement, these fintechs often conduct predictive analysis, sentiment analysis, and that's where machine learning plays a very important role. Or fintech selling to trading desk would conduct time series forecasting to help trader predict asset price while leveraging a wide range of data, including news, filings, earning calls, transcript, so on and so forth. And that's where machine learning also plays a very important role.
All right. All right, Satinder, thank you for taking us through the details. And let me go back to Kilan now. Kilan, like we were discussing, Razorpay provides businesses with a wide array of tools for accepting online payments and bettering customer experience, ranging from instant activation and automation to 100+ payment modes and real-time dashboard reporting. How have you used the latest tech innovations to make it all possible? If you could throw some light on your tech edge.
Yeah, absolutely. I think at the heart of it, it all boils down to being customer obsessed and understanding what customers need today as well as they'll need 5 years later, and taking punts on where needs will evolve, not specifically what they ask us today, and attempting to solve for it. And as Prashant mentioned, a lot of it is how we could become an invisible layer and ensure journeys and experiences are frictionless. I think we've in general seen an exponential growth in digitization in the country, right? And both our tech stack and the agility, I think, allows us to capture a large share of the market. Will continue to be. But what we see evolving from here is businesses kind of going towards a phygital journey with both online offline kind of becoming important together. So I think in our tech stack, the way we are kind of thinking of it is how we bring in a recent acquisition, kind of EasyTap in the fold. And look at delivering an end-to-end omni-channel experience as businesses' needs are evolving towards, in general, omni-commerce kind of experiences. A customer could come in, online, buy something, return at store, vice versa. Many of these scenarios as business are kind of scaling towards both dimensions. I think the combined stack will provide a new power. And I think at the heart of it is, ensuring that the core platforms possible to be extended to more and more of these use cases. And we'll keep expanding our footprint, in offline space. We'll keep, upselling, cross-selling our initiatives, and value prop across, different means to keep increasing, entrenching into businesses to help them solve more and more problems, right from, lending, business banking, payroll, accounting, many of these, some of these by being, India's full stack solution ourselves, some by partnering with others and, eventually enabling and delivering value for businesses.
Okay, all right. Madhusudan, let me come to you now. Your festive campaign, Khushiyon Ka Loan, highlights the ease of getting a loan in just 10 minutes. So how are how are tech innovations helping you to make the entire lending process mobile first and seamless? And how do you ensure that the entire process from application to disbursal to repayment is secure and there is no scope for data to get compromised? Also, if you could share some numbers with us.
Sure. The Khushiyon Ka loan is because so we bring smile to 1 million+ customers on a monthly basis, which basically means that we lend over 1 million loans for individual customers on a monthly basis, right? So and what that also kind of comes down is there's a 60,000 to 70,000 new loan applications that comes on our platform on a daily basis. Of course, we cannot serve all of them. The reason is it's not that the customer has an issue, but we have an inability to kind of assimilate a good amount of data to underwrite and serve these customers. So now when you look at that, it's all about the access of information and the digital footprints that the customer has left in the digital ecosystem, which helps us to kind of underwrite, which is kind of continuously developing in India. Right. So somewhere we have been lucky to be part of this last 5 years where there's a digital evolution that has happened. Right. So in this 5 years, what we have seen is largely the overall government initiatives. Right. You call it as India Stack or the digitization of KYC or the UPI and whatnot. And the second factor, which is also very important, is the agility which the customers have adapted to these initiatives in India, right? So I think that cannot be forgotten. It's not just about the digital infrastructure that exists, but the entire Indian customers itself who has such agility to kind of adapt to that. And of course the COVID, right? So the only difference that the COVID made is pre-COVID, what we saw was this adaptation was largely from the younger generation, but COVID kind of pushed the little bit of an elder, the mid-aged generation also to kind of look for using this technology-based products for their day-to-day transactions or any of these banking transactions. I think the post-COVID, what we've seen is a real large segment of the Indian population which is adapting to most of these technology tools, right? So I think these were some of the key aspects that helped a player like us, where we were trying to kind of continuously strive to make the customer experience seamless, but it was also many other macro factors which came into play in kind of delivering our products to our customers. Now, you also spoke about an important aspect about the security, right? So I think the larger mind share of our technology is towards ensuring the security of the user data, right? So I would see it in three different aspects to the security things. One is, of course, there's a regulation based security aspects, which is, you call it the recent the data protection bill, or there is the user privacy or the end customer data privacy. I think that is one aspect of it. The second is largely what we do at CreditBee is have a very dedicated focused team which works to ensure, of course, we use AWS cloud to kind of have our platforms, and then we use their serverless architectures and whatnot. There's a dedicated team which kind of totally focuses on the data security, and we also kind of work with multiple third-party white hacker community or the security companies to keep ensuring that the data security is one of the prominent aspects of our technology practice itself. And of course, not to forget is the overall practice that has to come in the company. It's not just these technologies, but the overall practice in terms of the employee awareness of the information security, or the trainings that has to happen. So if you look at any of the fintechs, I think the security is one of the core core thoughts towards which a lot of efforts would be going towards. Yeah.
All right. Speaking of providing secure, quick, and instant loans, let me come to you now, Prashant. Prashant, your Express Cash solution enables customers to get instant personal loans up to 5 lakh rupees. Tell us how your tech innovations are making the loan application, processing, and approval so fast and secure. How do you ease the repayment experience for customers?
Yeah. So first, I think it's important why one would offer this product, right? And I think at least the folks who run credit businesses in this panel will understand when you offer like a BNPL like product, like Lazy Pay, which is a 1 month, no interest, you accumulate a set of transactions and then you pay it off in one shot. As a business, you actually make no money, right? Whatever comes in actually goes right out, and it's basically a zero business, and so that we just use as a flywheel, right? That's our flywheel. It generates a few 100,000 customers every month. It's a phenomenal flywheel because it's break even, but it doesn't really make us any money. But once the customer comes in, this is a customer that has the Lazy Pay app, opens it multiple times a week, thanks to the various partners that they're very highly engaged on. So every time they do a transaction on a Swiggy or a Dunzo or a Book My Show, they get a notification saying that they've done a transaction, and they open the app to see, what the transaction was. So multiple times a week, we have an engagement with the customer. Often what we find is that these are also the same customers that are banked, but poorly served for credit, right? So they are, while they have a reasonable credit score, they may not have very deep credit track. While they may have kind of dabbled with credit, maybe taken a motorcycle loan, or maybe they have like some secured loan somewhere, they don't have a lot of credit history that a bank, even their own bank, is willing to underwrite them through and give them access to more capital when they need it. So that's where we benefit. We use 3 forms of data to really pre-underwrite a customer, if you may. One is as obvious, the obvious one, which is the bureau. We have a fairly large engagement with the credit bureaus in the nation, and with customer consent, we're able to get that data. The second is the payments data. There's a lot of data that goes into like Razorpay enjoys, PayU enjoys as well, because we do see a lot of customer data from a distance, and we're able to model that. With arm's length, we're able to get access to some scores, and that enables us to underwrite the customer better. And the third is our own BNPL data, right? The best data that we are able to see is the data that is created on our own platform. So customers every 15 days come and make a payment against an obligation. This is also a good practice because the customers generate an obligation and then they discharge the obligation. And this continuous back and forth actually allows us to understand the customer a lot better. There's a data and trust exchange that gets created between the platform and the customer. On the back of this, when that customer is on our platform, we're able to just simply drop a banner. We're able to say, hey, by the way, customer XYZ, you've been pre-approved for 3 lakh rupees if you need it, right? And then we'll do something in marketing saying, hey, you could perhaps spend it to get a new air conditioner, you could probably get a new computer, you can get a new, bike. And here are certain examples of things you can spend it on. And more often than not, what we see is that in a credit-starved market like India, customers will click through, and the conversion on that is very, very good. And because we're not going out and doing open market advertising and trying to attract customers at the time of need, because these are customers on platform, we also see phenomenal repayment rates. We see very high attachment to the product and continuous repeat on the product. Right? Customers who borrow once will often then borrow multiple times. And that creates a very beautiful kind of like yin-yang between the customer and the platform. And that's what we're seeing. And so we don't have a huge issue with repayments. We don't have to kind of chase the customers too hard. And as Madhu very well knows, a lot of these customers are very sticky, deeply repeating customers because they are truly looking to improve their lives. And if they had the credit, they would be able to get there quicker. And we all collectively as a macro world believe that without credit, we as Indians don't get to 5 trillion or 10 trillion or whatever the dream is. So we need to be able to do that and enable it in a seamless and safe way.
All right, Prashant, great insights there. But let me come to Rajiv quickly. Rajiv, what kind of solution would you recommend for businesses that are looking to keep up with evolving customer needs and make digital payments simple and fast? Does Innovati have unique solutions for merchants who want to offer multiple and engaging purchase options to their customers?
Yeah, yeah, sure, thanks. Yeah, so like I was saying earlier, I think with the change in behavior of the consumers, that they become much more digital, I think the businesses definitely need to look at payments beyond payments. What I mean by that is that they need to look at the purchase that is happening behind the payments and the purpose of the purchase behind the purchase. So, why is this consumer buying this today? Why is this consumer making a choice to pay for it through an EMI or through their coupons or through their cashbacks, etc.? Why? The purpose, if you start thinking through the purpose behind it, I think you start touching the human aspect of the solutions far deeper. And once that happens, your ability to engage with the consumer to create enriching experiences that stay with the consumer are far, far more. So I think that's the key thesis that I see at least the large enterprises taking up now, that they're looking at payments as a much more strategic aspect of business rather than a functional aspect of business. Earlier it was considered as a very utilitarian aspect like electricity, water. So you also have payments. You need to accept it. But now it's becoming a much more strategic aspect where it can sort of weave into the entire marketing funnel, right, from awareness to consideration to conversion, and create opportunities for them which are very enriching. Coming to the second part of your question, we absolutely do that. We really indulge a lot into understanding the consumer behavior. So we, for example, spend a lot of time understanding the state of mind of consumers when they're purchasing in a fashion store versus when they're purchasing in a grocery store, when they're purchasing electronics online versus when they're paying for a healthcare bill. And basis that, we try to put together solutions which will somewhere address the need that the state of mind has. Let me just illustrate that as an example. So in fashion, for example, more often than not, when you are at the checkout point, and as the bill gets prepared, you tend to remove a garment from the basket. Almost 66% of the times, you will remove one garment, because as the bill is clocking and it's adding up, you then suddenly say, you know what, I don't think I require this t-shirt, and I remove it. So there's a certain state of mind, and if you can tap that state of mind at the point of checkout, that extra garment in is a huge gross margin in for the merchant. Whereas, for example, if you take in grocery, it's very different. In grocery, at the point of checkout, you're always a little concerned about, did I miss something? I left home with a list, and did I miss something? Now, if you could tap that point of the consumer in that journey, it's all happening at the checkout, right? You are engaging the consumer very deeply. So that's what we do in our solutions, and we build very deep insights. We build clever tools. The merchant doesn't understand what's happening behind those tools, but the consumer feels engaged, and the merchant sees that, look, this consumer is coming back to me more often. He's buying a little more if I use Innovity, and that's what my purpose is.
Absolutely interesting examples there. Let me now go to Satinder and talk about a very crucial issue. How is AWS cloud helping businesses prevent fraud attacks while handling larger digital payment volumes and delivering a frictionless end customer experience? Satinder, what are some of your latest authentication techniques, and how are you leveraging artificial intelligence and machine learning to nip the problem in the bud?
We've taken two approaches here, Radhika. The first one is... Sorry, Shruti.
No problem.
Shruti, we have taken two approaches here. The first one is essentially on going back to the point on democratization of technology. What we have done is we have built and deployed a fraud detection model that customers can use without having any machine learning experience. How have we managed to do that? We have gained useful insights from historical data, 20 plus years of Amazon experience on dealing with fraud management, to construct a very accurate and a customized fraud detection model. Customers can start leveraging this immediately, enhance this model with their customized business rules, and deploy them to get results and generate critical predictions without requiring any machine learning or data scientist or any experience or any coding. I think this is the first approach that we've taken. Now, the second one is leveraging another set of AI technologies in very, very different ways. I'll give an example. We have streamlined customer onboarding experience by using techniques like facial biometrics, computer vision, OCR, NLP to verify identities. And that helps customers detect anomalous behavior and fraudulent scenarios like account theft, fake document, or false personal information. An example of that is a startup called Ella Credit in Africa. They use, they have a tool that leverages RAI technology to do facial recognition functions to verify an applicant's identity, wherein more traditional forms of identification might not be available. So they actually even provide proof of life in real time using their smartphone cameras, using AI technology called AWS recognition. And once applicants are approved, they are able to review customer spending habits and again use machine learning tool to determine additional credit worthiness. Another example is this New Data Security, which is a MasterCard company. They have used our technology to improve their fraud prevention techniques by using passive biometrics to authenticate account holders' identity. So they are able to collect and analyze hundreds of data points, which then are used to authenticate user and protect customers from fraud.
Okay, all right. Speaking of future-ready solutions, let me go across to Khilan now. At Razorpay, you already are, offering future-ready solutions like business banking, magic checkout, freelancer payment, and tools for GST and TDS calculation payment. Still, what growth possibilities do you foresee in the digital payment landscape in India in the coming years? And of course, how crucial a role will cloud play?
Yeah, I think India has leapfrogged the digitization journey in the last 10, 12 years. I remember 2010 when two-factor authentication was introduced, and how businesses were scared, right? I think quantum of commerce that was happening digitally was less than 1% back then, and now that's upward of 10%, right? But it's still very early days for us. I think for us to get from the 10 to the 30s and the 40s, I think is a journey. So I think the innovation is just getting started. I think the needs of businesses will evolve. You will have next wave of businesses coming not just from tier 1 but tier 4, tier 5. Connectivity is scaling up, 5G is coming. I think a lot more of that will bring different persona of businesses, and you will see that the current solutions that folks like us have, right, will not suffice the needs, and we will need to keep going back to drawing board, keep challenging ourselves, keep partnering with these businesses to look at really what are the pain points we solve. It could mean localization, it could mean more simplification, it could mean more voice-based stuff. I think a bunch of things will evolve over the next decade. But all of this, I think, is going to be crucial and will play a big role in how India scales from here. I think we've set a strong foundation, as some of the co-panelists spoke about, the India stack, the KYC stack, bunch of that, I think, has enabled the journey. I think we are on the right path to potentially leapfrog most other economies in terms of how the digitization journey scales up from here.
Okay, all right. Madhusudan, coming to you now. Currently, you're focused on facilitating different kinds of personal loans through your innovative platform, and your app has been downloaded more than 5 crore times. So in the future, do you see yourself pouring into other loan types? How do you plan to leverage cutting-edge technologies like cloud in that regard?
Hey, thanks. I guess one of the key things that what we cherish is the financial inclusion, right? So what I mean by that is, in this entire journey of serving the customers towards this mid-India segment, more than 1 million customers who had come to our platform without any kind of a bureau score, what we call them as new to credit, today have a very credible CIBIL or bureau scores, which make them a banking customer, right? So I think that's something what's a great takeaway for us, not just from running the company, but the difference what we make within the ecosystem. Now coming to the different products, right? So I think as I mentioned, customer has been the key focus in designing our product strategy, right? So more than 40% of our customers are self-employed, who are coming from non-metro cities. So these people are running kirana dukans, these people are running bakeries where they're selling these condiments. They are carpenters who are owning a carpenter shops and whatnot. So what we have seen is we constantly keep studying these customers in terms of what's the end use of these loans and why do they even come to our platform. I think that's been the key part, what has helped us in succeed in our growth here. So today what we realize is there is an increased need of a working capital loan from this self-employed and kind of micro SME segment. So I think that's the focus of the company today, to kind of develop those products to our customers. Now coming specifically to cloud, right? So AWS cloud is an integral part of our tech ecosystem, and as I was telling, we largely use this serverless architecture, of course, not to mention, which provides scalability, security, disaster management, and uptime guarantees, almost to the extent of 99.99% and whatnot, right? So I think that has been always a key thing that what they have provided. But one specific part which I want to talk about is the overall cost benefit and the planning, how the cloud itself has helped us. Now I talked about certain scale that while we disburse about close to 40,000 unique loans on a daily basis, we also have to receive EMI payments close to about 100,000 plus on a daily basis, right? So in that ways, there's a lot of interaction that the systems are kind of facing, and there's a huge amount of traffic that kind of hits the app and the platform even on a daily basis, right? So in that way, so the cloud itself, their pay as you go model, or reserve what is needed only, and no budgeting of infra on the day one when there is no traffic. I think all these things have definitely helped us scale our businesses. And as I told, AWS cloud is definitely an integral part of our tech ecosystem. Yeah.
Okay, all right. Moving quickly to Prashant now. Prashant, till date, you have 6 crore eligible app users and have given out more than 21 billion in credit. How do you intend to grow these numbers further with the help of emerging tech? Take me through your future plans at Payme.
Yeah, look, I think one stat I'll share with this group because I think it's really important. I was speaking to the financial regulator in the country recently, and I was asking him about the importance of fintech as he sees it, because fintechs typically get a bad rap in most conversations. But I think even the regulator recognizes that 90% of the new customers that have taken on a digital journey or have adopted digital financial services have come through fintechs. Only 10% have come through banks. So we have played a huge role, a collective group. All of us have played a huge role in bringing this reality to bear, right? So 90% of the new customers who are adopting digital technologies coming through fintechs is a huge number. So for us, I think that's what energizes us. We believe that this 60 million or 6 crore number can be north of 10 crores in coming years. So we will continue to work very hard to kind of make more people more eligible. And like Madhu said earlier, it's not like the customer is not eligible. It's that we don't have the right product for them. So I think the focus is on figuring out the right sachet size, the right product mix, the right low and grow strategy, the right process. And all that is possible through technology, right? The thing that technology enables, and I think we heard from Amazon as well, is that you can actually create mass personalization in a very meaningful way where n equals 1, right? So you can create a product for a person, and that's what technology enables. And so we're on that journey. So I think we will have 10 crore customers pre-approved. We will continue to double and triple. And the last point I'll say is I'm really, really proud that at least Pay You Credit is now profitable, right? So which means from this point forward, it's all just upside. So the larger I scale, the more profits we generate. And that's the beauty of actually running a credit business as well. So I think for us, the future is quite bright. And I think it's very, very, very deeply rooted in technology. I think everyone's promoted Amazon enough, but I'll continue to say my bit. I think they've been a great partner.
All right. And we wish you the very best with your growth targets and for all your growth numbers that you just said. Moving on to Rajiv now. Rajiv, you've entered partnerships with many reputed banks as well. How do your advanced payment channels help them reach out to more customers, expand across geographies, and accelerate lending?
Yeah, I think that's a very, very critical part of the way we look at things, because I think as gentleman before me was mentioning, the banks are looking continuously for new distribution channels to help them to acquire more customers in a more sustainable manner. What happens for us is because we have been trying to look at solutions by each category. So, look at solutions which are fashion oriented, look at solutions which are food, grocery oriented, which are healthcare oriented and all. We sometimes are able to provide them highly differentiated consumer lending purposes. And that helps them a lot, because what happens is that, a lot of the lending tends to happen in the electronic segment, which is well known, the consumer lending, or in the personal loan segment. If you take in the unsecured side, these are the two primary segments. But what we are able to give them is a higher diversity. We are able to give them a higher diversity. We are able to, sniff out loans for them in, say, healthcare. We're able to sniff out loans for them, say, in B2B marketplaces. We're able to sniff out loans for them, for example, in, say, travel. So that's what we are able to do. And from an expansion perspective, of course, given that we operate out of 2,000 plus cities, more than 400 million transactions annually getting originated. So that's not a problem. They're able to get scale. But I think it's the ability to spot new use cases which otherwise get drowned in the general humdrum of lending that's happening. That helps them a lot. Those new use cases, then they can nurture it, grow it, and then we can all together convert that into yet another new category of loans.
All right. Okay. One final question before we wrap up this conversation. Satinder, tell us about some tools and techniques on the AWS cloud that fintechs can use to drive customer spend in the long run while staying dynamic. how can they manage the entire value chain and improve operational efficiency cost effectively and securely?
Before I answer that question, I'll start with an apology and a big thank you. The apologies to you, Shruti. I called you Radhika. Hopefully, I've got this time right.
Not a problem, Satinder, at all. Yeah.
And thanks to my fellow panelists. We at Amazon are a very customer-obsessed company, and Kilan had been talking about it. So all the appreciation makes us believe that we are going in the right direction. So thanks to all the panelists. Now, coming back to your question, Shruti,
Yeah.
I think I'll divide it into two parts. Let me first talk about security. I'm going to lean on what Madhu talked about from a security standpoint, and it started his point of view on security from a compliance standpoint. Now, the AWS core infrastructure meets the most stringent security requirements in the world. And out of box, we support almost 93 security standards and compliance certifications. Now, whether it is PCI DSS, SEC, SCI, EU data protection, FISMA, the platform supports all these capabilities out of the box. And we do have a AWS compliance center as well. Now, that's a very unique capability because it's an interactive tool that provides country-specific requirements for cloud use and any special considerations that are unique to the country, as well as quick links to AWS resources to help them navigating in that particular country and details on the compliance programs. The Compliance Center supports almost 54 countries today.
Okay.
And 4 countries are getting at it. Now, that's the first part, which is compliance. Now, let's move on to security. From a security standpoint, the way we look at it is there are 3 parts to security. First one is infrastructure. And the second one is information. And Madhu talked about PII, encrypting information. Yeah. The third one is interactions. This is how do you kind of distribute information among your partners. So we provide security which covers both the infrastructure, information, as well as interaction. Includes preventive and detective controls through range of security offerings that we have.
All right. With that, we'll have to wrap up this conversation. And that's a wrap on the FinTech Masterclass of the Unicorn Makers. Thank you so much, Satinder, Khilan, Madhusudan, Prashant, and Rajiv for such an insightful discussion. And I hope our audience enjoyed it as well. Many thanks from all of us in the team. Goodbye again. Very much for watching.
Thank you.
Thank you.